Welcome to Factful Finance. Did you know that global financial markets are the heartbeat of the economy, influencing everything from the price of your morning coffee to the health of your retirement fund? Let's unravel how these markets work and why they matter so much. Stick around. By the end of this, you'll see the world of finance in a completely new light. Imagine this. You're walking through a bustling marketplace, filled with people buying and selling goods. But instead of fruits and vegetables, these traders are dealing in money, stocks, bonds, and commodities. This is the essence of financial markets. They allow people and institutions to trade assets, such as stocks, bonds, and currencies, to exchange capital, manage risk, and raise funds. But there's much more going on beneath the surface. Let's start by understanding the structure of these markets. The global financial markets can be broken down into several key categories. 1. Stock markets, where companies raise money by selling shares of their business to the public. 2. Bond markets, where governments and corporations raise capital by issuing bonds, essentially loans from investors. 3. Foreign exchange, forex markets, where currencies are bought and sold. 4. Commodity markets, where natural resources like oil, gold, and agricultural products are traded. 5. Derivatives markets, where contracts based on the price of assets are exchanged. Each of these markets plays a unique role in the global economy. When companies need to expand, they tap into the stock markets. When governments need to fund a project, they issue bonds. And when investors want to hedge against inflation or currency risk, they turn to commodities or foreign exchange. Now you might be wondering, why does any of this matter to me? Great question. Here's why it should matter to you. 1. Investment opportunities. These markets provide individuals with the opportunity to grow wealth through investments. By investing in the stock market or bonds, you can grow your savings and achieve long-term financial goals, like buying a house or retiring comfortably. For example, Liam, a small business owner, invested in stocks 5 years ago, and his initial $5,000 investment has now grown to over $12,000. These markets can offer you the same potential if you know how to navigate them. 2. Economic health. The performance of these markets is a direct reflection of the economy's health. When markets are doing well, it's often an indicator that businesses are thriving, unemployment is low, and people are spending. On the flip side, when markets drop, it signals that economic conditions might be turning sour, as we saw during the 2008 financial crisis. Number 3. Risk management. Investors can use financial markets to manage risks. Let's say Olivia, an investor, is worried about inflation eroding her purchasing power. By investing in commodities like gold, she can protect her wealth against rising prices. Similarly, Henry, an international business owner, uses the forex market to hedge against fluctuations in currency values that could impact his profits. 4. Global interconnectedness. These markets connect economies across the globe. When one country's market experiences a downturn, it can send ripples throughout the world, affecting everything from interest rates to the price of goods. For instance, when China's stock market dropped in 2015, global markets saw massive declines. Understanding how these markets work helps you make sense of global events, like trade wars or changes in interest rates, and how they affect your personal finances. The real question here is not just, how do these markets work, but why should you care? The answer is simple. Financial markets impact your personal wealth, your business, and the global economy. Your investments, retirement savings, and even the price you pay for products and services are all influenced by the performance of these markets. But here's the thing. Understanding how these markets work isn't just for the finance professionals. With the right knowledge, you can make better decisions, protect your wealth, and even take advantage of opportunities others might miss. If you've ever been confused by stock market movements or wondered why interest rates are constantly changing, you're not alone. Let's break it down into bite-sized pieces that'll make it easier to grasp. Supply and demand. The most basic principle of any market, including financial ones, is supply and demand. If more people want to buy a stock, the price goes up. If more people want to sell, the price goes down. This principle applies to everything from stocks to bonds to commodities. Market sentiment. Financial markets are often driven by human emotions. Investor confidence, fear, and speculation can cause sudden price swings. Ever heard of the phrase, buy low, sell high? Well, understanding market sentiment helps you figure out when to enter and exit markets for the best returns. Global events and economic indicators. From changes in interest rates to geopolitical events like wars or elections, these have a significant impact on financial markets. Keeping an eye on key economic indicators like GDP growth, unemployment rates, and inflation can help you anticipate market movements and make smarter decisions. Now, what's the takeaway here? The global financial markets are far more than just an abstract concept reserved for traders and billionaires. They're the engines that drive the economy, create wealth, and manage risk. Whether you're building your retirement fund, making investment decisions, or just trying to make sense of the news, understanding these markets is crucial. Which part of the financial markets intrigues you most? Drop your thoughts or questions in the comments below. I'll be responding to as many as I can. And if you found this breakdown helpful, be sure to hit the like button and subscribe so you don't miss out on our next deep dive into the world of finance. Looking to take your financial knowledge to the next level? The next video is just what you need. Keep watching. Disclaimer: this content is for educational purposes only. Mentioning any apps, products, or services is not an endorsement. Always consult a certified financial professional for personalized guidance.